January 13th to order. We do have some members that are, I think, stuck in public health and welfare that is running a little bit late this morning. Hopefully they'll join us shortly. Today we are going to have an overview of Kansas banks. We'll have presentations from the bank commissioner and from Alex Orrell from Kansas Bankers Association, but I did also want to introduce to the committee and the audience, we have Sean Mitchell with us today, who is with the Community Bankers Association. So Sean, thanks for joining us today. First item on the agenda is request for bill introductions. Senator Dietrich, do you have one?
Thank you, Mr. Chair. I would like to introduce 22 RS 2489. It's a bill concerning permissible investments made by life insurance companies, updating some limitations and requirements.
Okay, very good. Committee, are there any questions? Any objections? Your bill will be introduced. Next, we have Melissa Wegman with the OSBC Oz.
This always seems to happen to me. The first one is 22 RS 2435, which basically reflects the discussion at the Joint Committee on TIFIs that occurred December 7th and contains the amendments that our office recommends for a supplemental bill. And then the second bill is 22 RS 2442, and that clarifies the legislative intent for the first TEFI beneficent to receive its authority to transact business as of 12/31/21, as stated at the Joint Committee's meeting in December.
Thank you, Melissa. Committee, are there any questions? Any objections to those bills being introduced? See none, they'll be introduced. Thank you.
Thank you.
Committee, I would like to note in your folder for some reading for tonight is a overview of the, Alex, you do have a bill to introduce. Well, let's do that.
Good morning, Mr. Chairman. Thank you for the opportunity. Good to see everybody. I do have a bill introduction, 22 RS 2531. It's a bill regarding federally regulated Erisa Association health plans.
Any questions, committee? Any objection? Your bill will be introduced. Thank you.
Thank you, Mr. Chairman.
I think you might prepare for a hearing on that Thursday. Okay, we in your packet is a overview of the Joint Committee on TEFIs. We're not going to cover that in committee today, but that is there for your reading, and I would encourage you to read that because I don't think we're done. We will have a couple of cleanup bills and possibly an insurance-related bill according dealing with TEFIs also, so it would be good to have an understanding. Let's now turn our attention to an overview of Kansas banks from our bank commissioner, David Herndon. Welcome, Commissioner. Thank you for being here today.
Thank you, Mr. Chairman, members of the committee. My name's David Herndon, and I am the Kansas State Bank Commissioner. It's my pleasure to be here this morning to present an overview of the Office of the State Bank Commissioner. I'm joined by some staff members, Deputy Commissioner in the Banking Division, Tim Kemp, Assistant Deputy Commissioner in our Consumer and Mortgage Lending Division, Jim Payne, and Melissa Wegman, General Counsel, who was at the podium just a moment ago. You have a slide presentation, I think, that I'd like to go over, starting with the structure of the agency. We're typically or generally have 5 active divisions in our office. The Division of Banking and Trust, which oversees, regulates state chartered banks and trust companies. The Division of Consumer and Mortgage Lending, which regulates non-depository consumer lenders and mortgage lenders in the state. Our Legal Division, our Administration, and our Information Technology Division, which not only operates our internal IT infrastructure and procedures, but also conducts examinations for banks and non-banks on their information technology programs and that sort of thing. Our staff has 110 authorized employees. We have 3 current openings as of last Friday, taking applications. If you know anybody that's looking for a job in the industry, please refer them to us. We are a fee-funded agency. 100% of our income is from bank assessments and licensing fees and that sort of thing. And our this year's budget is a little over $11 million. First, I'd like to focus on the banking division in our agency. As I mentioned, we examine all banks and trust companies once every 18 months is our mandate, unless we need to be there more frequently given the institution's size or if it's under any corrective action. Corrective action classifies as a problem bank. We do alternate examinations with our federal counterparts, primarily the FDIC and the Federal Reserve Bank, because if you are a state bank, it's an option to be a member of the Federal Reserve, as opposed to if you're a national bank, it's a requirement. So if the Federal Reserve has a state bank that we can alternate examinations with them to meet that mandate. We have, as of December 31st, 2021, we have 179 state chartered bank in Kansas. We have 32 active trust departments in those banks, and we have 12 independent trust companies. There's over $120 billion of assets under supervision between the banks and the trust companies. The banks are about 56.9 billion, and the trust companies are nearly 64.5 billion. States divided geographically into 3 regions. The East region is what we call is really a northeast region of the state. The Northwest region obviously is Northwest, and then the South region is the largest geographical section of the state. It goes from the eastern Kansas border to the western Kansas border in the lower half of the state. So, but the banks are pretty evenly divided, number of banks in each region. We do focus obviously on banks that are in agricultural communities. Our staff is more inclined to have an agricultural background examining tools. Trusts are statewide, 12 trust companies and 32 active trust departments, as I mentioned. We operate those out of the Topeka and the Lenexa offices. The examination process for a safety and soundness examination at a bank has 5 components to it, and each component is then built into a composite rating. Banks are rated on 6 different categories or components, and it's known as the Camel's ratio, which is an acronym for capital, strength, assets, the quality of assets, management capability, earnings, liquidity, and sensitivity to market risk. Banks are rated on a scale of 1 to 5, with 1 being the best and 5 being the worst. My problem institutions have some level of oversight from my office based on how severe the problems are. But any bank that is rated a 3, 4, or 5 is considered a problem bank, and there is some sort of corrective action underway, informal or formal. The first and the least formal is probably a board resolution, which is simply an agreement between our office and the board of the bank to correct some actions. These are matters requiring board attention. Next would be a memorandum of understanding, which is just a little bit more sophisticated in requirement and that sort of thing, followed by a consent order, which is a public document that calls for absolute particular action with a particular time frame. So if you're a 3, 4, or 5 rated bank, you are considered a problem bank, and you're going to hear more from us. The good news is we don't have any 4 or 5 rated banks in the state right now. We do have 7 out of 179 banks that are considered problem banks. All of them are 3 rated. 6 of the 7 are based on financial statement issues, maybe asset quality, maybe management, maybe lack of earnings or that sort of thing. The 7th one is not so much financial as it is they had some compliance issues, primarily with Bank Secrecy Act and anti-money laundering laws. All of these are being addressed, and it's some of those 6 are improving, others are pretty flat, but we haven't seen any really bad movement declining. In addition to the 179 state-chartered banks, 37 of those are Federal Reserve members that I spoke about earlier. There are 27 national banks in Kansas. We have no authority over national banks. That's handled by the Office of the Comptroller of Currency. And we have not had any recent conversions of charters either from national banks to state banks or from state banks to national banks. There have been some changes, movements through acquisitions and mergers and that sort of thing, and I'll speak to that in a moment. Total assets, as I mentioned, are $56.9 billion. The average asset size bank in Kansas is $313 million, with a median of $150 million. That's up significantly in the last several years. That results in a growth of dollars under management by banks and trust companies in our state. Banks did receive a boost in earnings in 2020 and 2021 through the Paycheck Protection Plan that was nationwide. Kansas banks in the second phase, which was the phase that ended September 30 of 2021, provided $704 million of loans to their customers. In the first phase, which was a longer phase and ended in 2020, it was the $2.8 billion of PPP loans were done. And as you know, the federal government forgave a lot of those PPP loans. Banks earned a fee for generating those loans, depending upon the size, of somewhere between 1% to 5% per loan. So when those loans were forgiven, the banks were able to recognize that fee income as bottom line income. Despite that, banks' earnings were very, very healthy, but when we do an examination, we do carve out that because it was a one-time event. To reflect the changes in bank charters and the decline, Kansas, just like the rest of the nation, has seen a pretty steady decline in the number of charters in the state. In 2016, we had 217 state-chartered banks. At the end of the year of last year, we had 179. Most of those are coming from mergers and acquisition activities within the state. Some of them are banks that are chartered in a state other than Kansas, but might buy a bank that is in Kansas. So that has it. But it's been mergers and acquisitions as opposed to failures or that sort of thing. Trust assets in the millions have also seen an increase. In 2016, the number was $57 billion, and it's now $64 billion. Trust companies only file an annual report, so that $64 billion that I mentioned is as of the end of 2020. They are completing their 2021 year-end reports right now, and those will be in later, and we will update these numbers accordingly, and you can always find these numbers on our under the agency snapshot portion of our website. The 5 largest state-chartered banks in Kansas. The largest is Cross First Bank, headquartered in Leawood, with $5.3, almost $5.4 billion in assets. Second is the Equity Bank, headquartered in Andover, with $4.2 billion. Then Security Bank of Kansas City at $3.7, Emprise Bank in Wichita at $2.3, and Kansas State Bank of Manhattan at $2.3 also. Those are the 5 largest. The 5 smallest are Farmers State Bank in Dwight at $17 million, Dickinson County Bank in Enterprise at $17.5 million, Prescott State Bank in Prescott at $14.8, State Bank of Burton at $12.7, and the smallest bank in the state is Walton State Bank at $11.6 million. So we go from $11.6 million to nearly $5.5 billion in a swing. Banks are becoming more sophisticated, they're becoming larger, they're introducing new product, or new product is coming their way. So our exam staff needs to stay on top of that with their talents and training and that sort of thing. As I mentioned, income has been quite strong, even without considering the impact of the PPP loans that were in 2020 and 2021. Return on assets, depending upon if you're a sub-S income tax filer or a non-sub-S, is above 1.25% return on assets, which is a very healthy number for our industry. Capital is also strong, with overall Kansas banks having nearly 12% in equity capital. Kansas banks like to loan money as well. 56% of their assets are in loans, and these are all kinds of loans, from consumer loans to finance cars and personal expenses and that sort of thing, to small business loans, to agricultural loans, both production and farm, to, of course, mortgage loans. So 56 cents of every dollar in assets is put back out in the loans. Another 27% is in securities. A lot of those are Kansas municipal bonds that support our state and support the citizens of Kansas. We keep about 10.5% of our assets in cash to meet the demands of depositors and that sort of thing. I mentioned a moment ago that there had not been any new banks or new charters issued, but we've had some conversions in 2019, none in 2020 or 2021, but we are working with 4 national banks now who have expressed interest, at least to have a conversation about moving from a national charter to a state charter. We think there are obvious benefits to that. Maybe a little bit biased, but we think that there are obvious benefits to that, and we will certainly work with any national bank that is wants to pursue considering a charter change. We had 7 mergers and acquisitions last year in Kansas, between mergers of peers most of the times, and in 1 or 2 occasions we'll have a common ownership group that has several charters of state banks, and they'll collapse all of those under one. So the number of banks might decrease based on charters, but the assets remain the same or even go up. Moving to the trust companies and departments, as I mentioned, there's 12 trust companies and 32 trust departments within banks that control nearly $64.5 billion in assets. The 5 largest trust companies and departments are the Benefit Trust Company in Overland Park, the Midwest Trust Company, also in Overland Park, Main Star Trust Company in Onega, the Bank of Labor in Kansas City, Kansas, and Great Plains Trust Company in Overland Park. We're active also outside the state in the nationwide organization, trade association, and quasi-governmental entity called the Consumer, I'm sorry, the CSBS, the National Trade Organization, and we have recently received a reaccreditation for the banking side and received for the first time an accreditation on our consumer mortgage lending side. The Conference of State Bank Supervisors, like I said, is both a trade organization and a quasi-governmental organization in that they own the National Mortgage Licensing Service, which was created by Congress, but CSBS owns that. We're active in the organization with committee participation on both the banking and the CML side. We're involved with the Federal Legislation Committee. We have a vice chair spot on that. The Emerging Payments and Innovation Task Force, which works closely with the Federal Reserve. We have representation on the State Supervisory Process Committee as well. Mentioned earlier that we have a new entity called a Technology-Enabled Fiduciary Financial Institution, or TEFI. You have an overview on that with what's going on, but we are in the second phase of the pilot program that was created by the act adopted last year. The time frame was in April 2021. The TEFI Act was signed into law, and a conditional charter was granted, and the pilot program began on July 1. On December 7th, we had the Joint Committee with the TEFI Oversight meeting. On December 31st, the Transactional Authority was granted to the beneficent group to operate the pilot program, and that's underway now. Moving on to the Consumer and Mortgage Lending Division, this is the group that examines anybody that makes a loan, that's licensed to make a loan to a Kansas consumer that does not accept deposits. So it covers anything from the buy here, pay here car lot, to the pawn shops, to the payday lenders, as well as mortgage lenders, mortgage loan originators, and that sort of thing. So it has a significant responsibility, primarily in compliance. We do not do safety and soundness examinations on this, but a lot of these companies are nationwide, so we focus on the Kansas consumer part of it and then rely on the state that they might be domiciled in for examination responsibility too. We have two primary state responsibilities: the license of non-depository entities that conduct mortgage business, money transmission, extend consumer credit, or provide debt management services. And the second one, examine entities licensed by this division for compliance with state and federal laws and regulations. We also administer grants to support consumer education and awareness in this division, as well as responding to any consumer that might have a complaint or a concern about one of the entities, including a bank or a trust company. There are 4 state laws that apply to this division: the Kansas Mortgage Business Act, which regulates non-depository mortgage lending, brokering, servicing, and that sort of thing. So think of the big players in this market might be the Rocket Mortgages, Quicken Loans, that sort of thing, that every time you go to commercial on television, one of them is advertising, it seems. So we have those responsibilities along with the other states that they do business in. We also apply the Uniform Consumer Credit Code, or oftentimes called the UCCC. This is the primary state law that governs consumer loans and credit sales. Then the Kansas Money Transmitter Act for money transmitters. This is anybody that sends money on behalf of a consumer electronically or otherwise. And this would include everybody from the big companies like Wells Fargo and PayPal and that sort of thing, but also anybody else, regardless of their size, that's licensed to operate as a money transmitter. And then the Credit Services Organization Act, which regulates credit services, organizations, and management services that operate in Kansas. So that's a lot of responsibility, and it's being conducted by a lot of people with big growth. For example, at the end of 2019, we had 10,705 licensees in the state of Kansas that were doing one or more of those businesses. At the end of 2021, the number had jumped to 16,439. A number of those are in the mortgage loan origination business, which went from almost 6,500 to almost 12,000 in licensed entities. Interest rates are low. Mortgages are popular. Mortgage market is very hot, and people are entering that mortgage loan origination field because of the opportunities to make more money than doing whatever they were doing beforehand. Loan volume has also gone up, obviously, if you have that many more people. We had at the end of 2020, there were $48.6 billion in non-depository loans. As the 2021 numbers are being reported, we expect that number to increase accordingly. As I mentioned, Money Transmitters is an entity that transfers funds on behalf of consumers. They're regulated in Kansas under the Kansas Money Transmitter Act, and these include, there were 169 licensed money transmitters at the end of 2021, including Western Union, MoneyGram, PayPal, Google Payments, Facebook Payments, those sorts of things, as well as the smaller, less national scoped entities. Examinations are not as frequent for CML entities as they are for banks, but we do examine them on a mandate of pretty much 36 to 40 month range, and we can rely on or work with other states to do joint examinations for those that might have headquarters outside of Kansas but have operations or serve Kansas consumers. The division also participates on a limited basis in multi-state examinations, as I mentioned, and has statutory authority to take charge of enforcement actions as needed for companies if they are out of compliance. If they're out of compliance, they're probably also looking at some fines that are administered by our office. Fines and penalties that are collected as a result of enforcement actions are deposited in a consumer education settlement fund and used exclusively for consumer education. Consumer education comes in the form of grants to support those programs statewide. We've provided approximately $5 million in grants for consumer education in the last 10 or 11 years, awarding an average of $100,000 per year. Grantees have served over 9,600 Kansans, students, and adults last year alone. We partner with the Kansas Insurance Department and its division, the Office of the State Securities Commission and its division, to sponsor a Kansas Financial Scholars Essay Scholarship Contest, where Kansas high school seniors demonstrate knowledge of money management to compete for scholarship funds. 2021 was the 7th year for the scholarship contest, and $10,000 was awarded to high school seniors, plural, who are continuing their education in Kansas. Educational features are provided on the OSBC's website and frequently asked FAQ section of our website, so you can get additional information there. We have also provided grants to nonprofits and others that are focused on the same thing. The Consumer Credit Counseling Services received a grant, and they served about 4,500 people in their offices in Wichita and Salina last year. Housing and Credit Counseling, which provides financial education and counseling services primarily in the northeast part of the state, but also through their locations in Topeka and Lawrence. And they served about 800 plus people in their mission. The Pando Initiative, which operates a simulation program called Reality U, which is a literacy simulation where they take high school or early college students and project, here's where you're going to be when you're 26 years old. You've completed your education or not, you've established your career or not, you're making money or you're not, you have a family or you're not, and it puts, okay, here's your circumstances when you're 26 years old, and trains for some financial literacy and that sort of thing. And then the Kansas Council on Economic Education issues their course called Personal Finance Challenges. That's for grade 6 through 12. Completion for students learning about personal financial services, responsibilities, and that sort of thing. And then Life Smarts, which also is for 6 to 12 grades. Students develop a variety of consumer and marketplace knowledge and practical application of those. We do get some complaints. Obviously, people have concerns. We get about 1,100 inquiries per year, and of those 1,100, usually less than 200 turn into a formal complaint. We are not judge or jury. We are at best a mediator. If there is a legal case involved, then we obviously step aside and defer that to the court system. But most of the complaints that we receive are resolved through communication with the lender, whether it be a bank or a consumer lending, and the consumer, oftentimes it's misunderstanding or misinterpretation of acts or that sort of thing. But we get inquiries or complaints in all aspects of the business. And right now we're seeing a lot of them, for example, on the lapsing of the moratorium granted at the federal levels on evictions, foreclosures, and that sort of thing. That now that that's lapsed, we're getting people going, I can't pay, they're making me pay or threatening me or that sort of thing. So it's political as well as financial that they're dealing with. So that concludes my comments. We always look forward to the opportunity to visiting with you, and I stand for questions, Mr. Chairman.
Commissioner, thank you very much for the very thorough presentation. I'll open it up for questions, but I have a couple first. In my conversations with a number of bankers, it appears like liquidity is extremely strong, has gone up as, I don't know whether it's stimulus dollars or federal dollars or stipend payments, whatever it is, but liquidity at banks seems to be going up. Loan demand seems to be flat at best, which at some point may affect capital ratios. Are your examiners seeing that? Are they recognizing maybe the strangeness of the situation? Can you briefly talk about that?
Yes, sir. That's a very good point, because banks do have a lot of liquidity right now, and a significant portion of it came from the forgiveness of the PPP loans, where borrowers got money, deposited into the bank account, and now they don't have to repay it. So it's been forgiven. Therefore, that also makes loan demand flat, because borrowers have a lot of cash right now and they're using their own cash instead of going to the bank and get it. That will change just because economies are circular, and it will change. I have no idea when, but the strength is right there now and reflected. A concern in my office and the examiners are seeing is that bankers are chasing yields, because interest rates are so low and have been so low, they don't have anywhere to put their money to get a yield. So they might be taking an additional risk that otherwise they wouldn't. in terms of how they're investing that money. So that's the key point that examiners are coming back with us is you have a lot of liquidity, but don't get foolish and just chase a yield.
Are there areas of concentration or concerns that your examiners are seeing going out in the next 6 to 12 months that you can make us aware of?
We've been quite fortunate that the ag economy in Kansas has been strong, good yields, good prices, that sort of thing. Small business lending is good. The consumer lending is also good. So right now, things are going well. If you read banker sentiment going forward, they're concerned about interest rates. We believe the Fed is going to start this year with interest rate increases, 3 or 4 perhaps. That will have an adverse impact on earnings, likely because people have been paying off debt, and they're likely not going to go back into debt if interest rates are higher. It does provide a better spread on the issue of bankers chasing yields. Because interest rates are higher, it gives them an opportunity for a better net interest margin. But overall, the Kansas economy has been strong regardless of sector. Obviously, there's a couple of exceptions, and there always will be, but overall, loan quality has been quite good. Delinquencies or defaults have diminished, and we're riding the good wave right now.
Good. Finally, I'm old-fashioned, and I'm pretty set in my ways. When I get a bill, I still have a checkbook. I sign a check, I put it in the snail mail, and I mail it to them. My 20-year-old daughters want me to use Venmo. Should I be trusting those type of money transmitters and send my daughters their allowance or whatever it is that I'm sending them by Venmo, or should I continue to send them a check?
Mr. Commissioner, your answer is coming from an old guy who still has a checkbook, who still balances that checkbook, and has 2 daughters who say the same thing. Dad, the only time I ever saw you, or the only time I ever went to the bank was when I wanted to see you, usually to get money. I have personal concerns about the electronic payment system, and I know the Federal Reserve is working hard to come up with a new one that I think will alleviate a lot of those fears. But without naming a particular industry or a particular company, somebody's going to lose some money sometime. They simply are. And there is no backing of that money like in a bank has federal deposit insurance, that no depositor has ever lost a nickel since that's been in place. Having said that, I understand that economies change and people want to invest in Bitcoins, and they read about, I made millions of dollars in a Bitcoin transaction, or they want to do the electronic payment and that sort of thing. So it's an evolving situation. To my knowledge, nobody's lost any money right now. But if I create one, I'm not going to keep a lot of money at risk in there just because it's like, if I were to go to a casino, I'm not going to spend a lot of money there either. So because it's kind of in my head, it's the same balance.
They'll just have to understand they're going to continue to get a check. Committee, are there additional questions of the Commissioner? Senator Olsher.
Great, thank you, Mr. Chair. Piggybacking off the Chair's initial question, that capital ratio issue, is that similar between credit unions and banks? And then additionally, is that situation similar Kansas compared nationwide?
The second part of your question first, it is similar. Overall bank capital has increased nationwide. There are regulatory requirements for the amount of capital, and some of that is optional as to the size of your bank. If you're a small bank, you can have a different capital calculation. It's that that is adjusted periodically. There is legislation introduced by Congressman Mann at the federal level that would make that more reliable or less volatile, is a better way of saying that. So capital strength is good. I mentioned it's approximately 12% in Kansas, and that's higher than it has been for a while. I really can't speak to credit unions. We have no authority to examine or opine on the strength of credit union capital. The ownership structure is different, though, so keep that in mind as well.
Additional questions? Senator Pittman.
Thank you, Mr. Chair, and thank you, Commissioner Herndon. I appreciate your work. I know that over the last year we put you through a lot of hoops to work with the TEFIs, and I know that was a lot of work, and it was outside the norm. And I, for one, appreciate the efforts of you and your organization on that front. You know, obviously we had some challenges along the way, and I think you put some framework around it that was valuable. When I was just wondering two questions. When you brought up the point about, you know, it's not even a major initiative of the commission, but the part about the grant programs and consumer education. Obviously, some of us are very focused on education of our state, our constituents. We think about poverty and how to break the cycles of poverty, and one of the biggest things we can do sometimes is to put financial literacy pieces in place that can help them out, that socioeconomic. Wherever they're at. You know, I noticed that it's western and central Kansas. Obviously, I'm in northeast Kansas, and there's a lot of urban areas where I'm at, where these kinds of counseling services can really make a difference. And I know it's not the focus. It's kind of like you're using some of the funds that you have as fines as part of this. But I can't help but there's only a couple ways we have our school systems, we have, you know, social systems, and we have this now. What is the constraints on that grant program? Can you just kind of give the boundaries? Is it just whatever we have, we kind of put out there, or is it an initiative that grows in some fashion or form that you can count on? How do you structure that? Because it's not necessarily a lot of money, but it's some.
It is some, and it is restricted to, as you pointed out, financial literacy initiatives, whether they be by a school, by a university, by a social service agency, that sort of thing. We have had challenges in attracting grants, as odd as that may seem, as applications. We have the money, we advertise that we have the money. The grant application is a very, very simple document, but we just haven't been able to get applications. We work with the Kansas Insurance Department. They're telling us, our partners are telling us the same thing. In the last couple of years, we have made it a focus to let people know that we do have money and urge them to get that. And we saw 2 more applicants, I think, last year than we did the previous year. But whether or not we are successful in continuing to get that out is unknown.
I'm going to make it my goal to get a couple more applicants from my district right into that program, particularly the NAACP in my area. It really has a focus in this, and I'm excited that there might be they try and build these programs from the ground up in the grassroots effort amongst the membership, amongst their financial advisors, and having this program here could just be the thing that they need. So I'm excited about that.
Please refer them to the website for an application and for additional information that they might be able to tailor what they want to provide.
Mr. Chair, one last thing. Just on cryptocurrency, is there anything that you're watching in the industry as it develops from a banking standpoint? I know you're keeping on top of what legislation is, and you're kind of seeing the players in the market, but is there anything that this committee should just be tapped into over the last year, or anything in the industry that you're kind of tracking?
Again, referencing back to my answer to the chairman's question, cautious observation of what's going on with particular attention to what the Fed is doing, because the Federal Reserve is working on a U.S.-backed Bitcoin or cryptocurrency that may or may not exist cohesively with the private cryptocurrencies. But I think that will provide comfort to the pessimists like me, or the cautious people like me that says, I want something backing it besides a very volatile market risk. And if the Fed comes through with something like that they expect, they're working on right now, and I've seen dates from later this year to 2023 that it would be introduced, I think that will have a calming effect on that whole industry. Right now, we are not hearing from bankers in our state who said, we're anxious to invest in a cryptocurrency as one of our asset pools. We're not seeing bankers that saying we're anxious to loan money to consumers so they can invest in cryptocurrency. But some states, that's happening. It just hasn't happened to Kansas, at least getting to our office.
Okay. Commissioner, thank you very much. We appreciate your presentation and your willingness to take questions.
Thank you very much.
Alex, I have read your presentation. It was very well done. I would point to the committee that some of the PDFs and the graphs did not come through the printer very well. It is online, and I would encourage you to go look at that. Unfortunately, you've got about 5 minutes, so you can hit the high points or tell us a joke, whichever you prefer, and we'll read it.
I got a good one in the first paragraph.
All right.
All right. So, good morning, committee. My name is Alex Orpier, on behalf of the Kansas Bankers Association. Pleasure to be here. It's my pleasure to also introduce Kathy Taylor, who serves as Executive Vice President and General Counsel, as well as Kelly Van Zoll, who is Assistant Vice President and Staff Attorney. As you guys know, they are the real brains of the operation, and I can't even say that I'm the pretty face either in this operation. So there's your joke, Mr. Chairman. First part of my testimony, I was going to give a quick overview of the KBA, then I was going to do some highlights of the rest of the testimony, so I will be quick. KBA was founded in 1887. We're not just an advocacy organization. We provide an array of services to our member banks that go from legislative advocacy, education and training, insurance services, legal and regulatory compliance. Our mission statement is simple and straightforward. Together, we support our member banks and bankers with leadership, advocacy, and education to benefit the communities and customers they serve. We represent 99% of the headquartered banks in Kansas. We also represent 20 out-of-state commercial banks and 7 savings and loans that employ more than 22,000 Kansans that provide financial services in every county of our state. We have a KBA insurance department, subsidiary of the association. You did hear me introduce a bill this morning regarding the association health plan. KBA Insurance was founded in 1900. We provide casualty products, cybersecurity, bank director, life and health insurance products. We have the second largest group plan covered by Blue Cross Blue Shield behind the state itself. In our health plan, we insure 12,000 lives. So we are very interested in insurance. So you might not necessarily guess that with the KBA, but we are definitely very interested. So you'll hear more about that in my testimony next Thursday. We also have education and conferences department. We provide training to over 4,000 bankers from high-level economic and investment conferences to frontline bank personnel. We also have a foundation that provides scholarships to aspiring bankers. We work with 2 universities that have specific banking programs, the Fort Hays State Banking School, as well as Benedictine College, the Thompson Center for Finance and Integrity in Economics. We also have a robust legal and compliance department. At the KBA, we actually employ 11 attorneys on our staff. We have 36 staff members on our team. That's where Kelly actually works half of her time. When she's not lobbying down here, she actually audits banks and provides legal support to our member banks. We have 125 banks utilizing those services where we can actually enter into a contractual agreement to provide legal services for our member banks. That is something we embarked on in 2010, and that has been growing, and it's been a growing need, and it's the number one cost for our member banks is regulatory compliance. The rest of my testimony, I have multiple attachments. You'll see an economic outlook starting on page 3 from the Fed. The Federal Reserve is a great resource. I highly recommend that if you need any economic data, that you look at their website, you reach out to them. President George, as well as your Chief of Staff, Diane Rayleigh, are great resources for you and very timely in response. The one thing, a couple of the graphs that I'll point to, page 8, inflation is at a 30-year high. That's something that everybody is talking about. Page 9 is talking about, will workers return to labor force? We're dealing with workforce shortages just like everybody else. I'll use my brother as an example. He's a banker in Kansas City, Security Bank Kansas City. He manages 9 branches for Security Bank. He was working the teller line at the drive-thru last week. And he manages 9 other branches, and he's a regional vice president for them. So they are dealing with some serious labor shortages as well. On page 15, tightening on the horizon, he talked about interest rates. The commissioner did a fantastic job. I'm trying to be complimentary to his testimony. The FOMC, which is the Federal Open Markets Committee, which has 12 members, 7 members of the Federal Board of Governors, as well as the president of the New York Fed, as well as 4 other members of the remaining 11 presidents of the Federal Reserve banks. They're the ones that set monetary policy and decide the interest rates. If you look on page 15, they have their projections for interest rates over the next couple of years. And as you can see, on there that they are projecting interest rates going up and are ticking towards 2.0, the federal funds rate by 2024. So we do anticipate those rates going up in the very near future. The next attachment that I have in my is a collective report regarding the Paycheck Protection Program. Our banks worked their tails off on the Paycheck Protection Program and distributed out a lot of those funds, worked around the clock. They did receive some fee income for that, and it was warranted. They were working around the clock, and a lot of them, what they did with that fee income is they put it in their provisional, which is their loan loss reserve funds for rainy day fund if anything ever happened. But one interesting graph or one page in that, if you're interested on who took the most amount of the PPP money, on page 25 of my report, you'll see the industries that did the most PPP loans. The top 4, healthcare and social assistance was 1, professional, scientific, technical services 2, construction and manufacturing was 3 and 4. In Kansas, PPP, the average loan size was $93,000. We fared extremely well compared to our neighboring states. Kansas is a very strong community bank state. The states that did not have a strong community bank presence did not fare as well with Paycheck Protection Program. There was a Bloomberg article that showed that Kansas, this was after report 1, but after round 1, Kansas ranked 3rd in the country in providing PPP loans that covered over 78% of eligible payroll. That did significantly better than a lot of the states that don't have strong community bank presence. So very proud of our banks that worked extremely hard to do that. On page 27, you'll see an FDIC report. That's a state profile. The commissioner did mention capital ratios. That is our community bank leverage ratios. Those are something that we do look at very closely. Kathy and I actually had the opportunity to travel to state last summer, and that is something we actually did here. I know the commissioner mentioned that the ratios are high right now, but we actually do have some banks that are not high. And that are dealing with some capital strains due to the PPP funds that have come down. A lot of the county money, hospital money, school district money that has come down is still sitting in those bank accounts, and it's putting some strain on those ratios. And on page 31, I've included an article from the American Banker regarding Congressman Mann's introduction of the Community Bank Relief Act, and it goes into detail of what he introduced to help provide some relief. The banks were provided relief, regulatory relief, but that went away at the end of the calendar year last year. So this is asking for a little bit more time to let that money work through the system. That's all really what we're asking. Just allow some time. That money will be spent. It's just not being spent right now. If it gets spent, it will be spent. Just, like I said, let it work through the system. The next attachment I have in here is cannabis banking. I know there's a hearing next week regarding medical marijuana. I've been asked about this a lot regarding banking and what we can do at the state level. I'd be direct that this is a federal issue regarding being able to bank cannabis-related businesses. But leaving the cannabis industry unbanked is not a viable option anymore. It is a major industry. 36 states have legalized medical use. There is a bill before Congress. It's called the Safe Banking Act. It did pass the U.S. House last year, 321 to 101. All of our U.S. House congressional delegation supported it, and it's sitting in the Senate. So there's a one-page white page on that. And then last, on page 41, is another bill before Congress in response to this legislature passing a bill last year, Senate Bill 15, enhancing credit opportunities for rural America, which is the tax piece of Senate Bill 15. That piece is now being considered in 6 to 10 other states and is also being pushed at the federal level. That bill now has 26 co-sponsors in the U.S. House and has 9 sponsors in the Senate. So very proud. Thank you for your support. Very appreciative of that. And the last item I'll mention is something that's came up late, is regarding ATMs. There might be a push by us this year regarding some ATM theft and damage legislation. We're seeing a significant amount of smash and grabs where people are pulling up and ripping out ATMs. It's organized crime. And what's happened is Texas has passed legislation increasing penalties and crimes for this. Because what happens when people do this, it's just probation, and it's not a strong enough penalty. And now our colleagues to the east and south in Missouri and Oklahoma are looking at legislation, and what happens is people are just moving north. And what we're seeing is way more activity. We actually had a bank here in Topeka get hit. Security Bank Kansas City has been hit 3 times, and another bank in South Central Kansas has been hit. He actually sent us photos of his ATM graveyard. So very tough stuff. But that's what we're seeing in there. And Mr. Chairman, I know it was longer than 5 minutes, but I talk fast. But I appreciate the opportunity. If any of you guys have questions, you know I'm around here, and just grab me. But thank you for your service, and good luck this session.
Alex, thank you. Hate to rush you, but we're about to be overrun by tax, and I know that the banks don't want to be looked upon unfavorably by our tax committee, and so we would like to get out of their way. Committee, thank you for your participation today. We are adjourned. We will not meet tomorrow. We will not meet on Monday. We'll be back here on Tuesday.